Hello everyone, welcome to this YouTube channel. It's been long since I last posted any video here, so you're most welcome to this new video. I'm gonna be showing you simple strategies that you can use for flipping small accounts. Please remember to subscribe and likes because it really helps a lot. So let's get started. So in this video, I'm gonna be showing you simple strategies. This is tradingview.com. You can see those are the tools that we're gonna be using for analyzing the markets, the trend lines, the arrow, and so many other tools that you can see there over there. So I'm gonna be showing you simple strategies that you can use. So these are the tools you're gonna be using for analyzing the markets. So that's the time frame you're using, the 15 minutes time frame, and the candlesticks. Basically, this is the tradingview.com website that shows you live markets that you can analyze on a daily basis whenever you want to take trades. So without wasting time, I think we should get started. So we go to indicators and strategies. So we are going to look for the moving average. So we search for the moving average. Yeah. So we click on it. That's the moving average. So there are so many other indicators there. So we're going to go to settings. The length we put it to, we're going to change the length to 20. So it's gonna be on close, and yeah, that's our style. So yeah, that's the setting. Yeah, so we're going to create another moving average. Second moving average, its period is going to be order length. It's going to be at 25. So we can change the color. We can change the color to let me say red. Change the color there. Yeah, we press OK. So basically, this is the strategy. Strategy is based on these two moving averages crossing. So whenever the red moving average crosses below this other moving average, the market is gonna slope and ride it down. So as you can see, whenever the red moving average crosses below the green, the blue one, that's a bearish trend, as you can see. So we're gonna take our sales whenever they cross, as you can see. So yeah, ride the market down up there. Let's see our second scenario. Yeah, so right there at that point, they crossed again and the market went upwards, as you can see. Basically, it's a very simple strategy for flipping accounts here. So we can see so many crossovers there. Yeah, so whenever those two moving averages cross, whenever the blue one crosses above the red one, it's gonna be a bullish trend, and yeah, we can ride it up to that rejection. Yeah, you can see. And then let's see, the red moving average just crossed. Yeah, there's a crossover around there. So we're gonna ride the market up to there. So many pips, as you can see. It's a very simple strategy that you can use for flipping small accounts. And yeah, there's a crossover around there. So we're gonna ride our market. It's a bullish trend, of course, up that side. As you can see, the number of pips you've got. So it's a very good strategy for scalping. So the recommended time frame that we can use this strategy for, it's a 15 minute time frame that it's more convenient. We can use. So let's check this out. Yeah, we have crossover there. We have the blue one crossing above the red one, so we're gonna run the market up to there. Let's get. So the trend continues and continues. So whenever those two moving averages cross, just know it's time to take action. And right, so over there is a consolidation. So you don't need to take the market. There's a liquidity grab around that zone there, so you have to stay calm in those. So it's best recommended to use this strategy during the trading sessions like the New York, the London session, since the markets are highly volatile. Over there we see a crossover, and then we ride the market down. There's some sort of consolidation around that region. So yeah, some sort of consolidation around that region. So we are not recommended to trade in such scenarios, yeah, because the markets don't move and you can just literally see every candlestick that's been formed. It's just consolidating around that area. So let's see, there's a crossover around there. So that is a bullish trend, of course. We ride the market after, and you can see a double touch around there. So that implies that we are gonna have a bearish trend, as you can see, but then due to the consolidation it had to react somewhere that side. So basically that's the strategy. It's a very simple strategy in small accounts. Yeah, so basically that's a very simple strategy from trading.com. Without wasting time, let's go to a second strategy I want to show you. So this time we're gonna be using the Bollinger Bands. Yeah, so sorry about that. We're gonna be using Bollinger Bands here. So basically we're gonna get the same. So we got indicators and strategies. So we're gonna use the Bollinger Bands. So yeah, so let's the Bollinger Bands around there. So yeah, over there. So basically it's a very simple strategy that you're gonna use. So basically this strategy works upon the rejection of around the zones, around the boundaries of these Bollinger Bands, as you can see. So whenever the market touches, whenever price reaches around those boundaries of the Bollinger Bands, you can see there's a rejection around there. There's a strong selling and buying pressure whenever the market reaches around those boundaries, you can see over there. So basically it's a very simple strategy that you're gonna use. And as you can see, whenever a price reaches there, it bounces off. As you can see, whenever price reaches there, it's time to take action. So basically there's a moving average inside in between them. It basically helps you identify the trend. So whenever the price is above the middle line, you can see inside there. That's It helps you confirm the trend where the market goes. So whenever it's above, that implies a bullish trend, and whenever it's below, that implies a bearish trend. So as you can see, whenever the market reaches on the boundaries, there's a strong rejection, there's strong selling pressure and buying pressure respectively, as you can see. So I as you can see around there the market has been consolidating. Let's see. Yeah, it's a very good indicator that you can use for confirming our entries and buys and sells. It's a very simple strategy for scalping. Yeah, so yeah, as you can see, whenever we touched up there, the upper boundary that has bounced down, so waiting for the next action and stuff like that. So it's a very simple strategy that you're gonna be using for flipping very small accounts here. So it's a very simple strategy. So yeah, there's so many other indicators that, so basically you can use this across different time frames. Say the 30 minutes time frame, it basically respects all these time frames that you're seeing. Here let's go the 1 hour. Still the same thing, yeah. So yeah, it still respects the same strategy, yeah. It still respects it, yeah. So yeah, you can use it on different time frames. That Yeah, you can use it for different time frames. You can see there's a bit of consolidation around there. So whenever it reaches around the boundaries, there's a strong buying and selling pressure respectively. So basically that middle line, that moving average in between the two boundaries helps in identifying the trend, yeah. So yeah, let's go the 4 hour time frame. As you can see, yeah, as you can see, like whenever the market reaches the boundaries, it bounces off here. As you can see, yeah, basically that's it. That's how this strategy works. Yeah. So thank you for watching this video. Stay tuned for our next video, which will be dropping next weekend. Bye bye. Have the best of your trading. Sign out.